The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, so come on back here to the Diagnostic Trading Hour. I'm your host, Darrell Martin, right here on TFNN.com. You can watch us live. I want to say it's 9 hours now every day of live trading on there on Tiger TV. Also, TFNN.mobi. You can listen to us around the clock. TFNN.mobi from your mobile phone. And let's check out where the markets are at right now. We got the S&P is up 1.25 point. The Russell is up 2.6. The Nasdaq's up 0.75. The Dow is up 7. So after a little run up, pull on back down. We'll take a look at those markets here in just a moment. We got oil currently up 85 cents on the day. We got natural gas down 91 cents, or 0.091, which is a 2.5% move. So big moves there on natural gas. We got corn right now. It is currently down 9 pips. That's 9 points. That's a 2% move. And we got soybeans up 8 points. That's almost a little over a 0.5% move right there. Got euro dollar down 82 pips. Aussie dollar down 53. Pound dollar down 31. All after their interest rate announcements. We'll go over those. We got the dollar CAD up 8. The dollar franc up 79 pips. So usually one of the biggest movers. And we'll when we dig into that, I'll talk about the dollar franc. We got euro yen down 41 pips. We got the pound yen down a whole 3 pips. U.S. yen is up 27. Gold is down 17 points, pulling on back up. What's down around 23 earlier. Also, we got silver right now is down 0.135, which is a little over 0.5%. And copper is basically flat on the day, just up 0.05%. Okay, so that's the market wrap for the day. Let's pull up some charts, and we got the big competition starting next week. So hope a lot of y'all got in there in time and get in on that competition. We'll be you'll get your emails, getting all the stuff coming to you soon. For those who did register today by 12 o'clock, and again, we'll have all the information coming over to you. And I can't wait just to see the trades, the comments. I'm going to be involved. Trade room, Tiger Den, all that, and just there to help answer questions for you. But also, make sure you sign up right now. It's a perfect time to demo out and try the diagnostic box spread scanner for Nadex and the diagnostic binary scanner for Nadex, and a chance to use the deviation levels as well. So if you haven't done that, hop on over to TFNN.com. You can scroll on down here, and you can click on it and sign up and get activated right away. Okay, so make sure you hop in there and take advantage of that deal. It is going to help you. It will help you tremendously. Not only the education, the training, the extra training videos that are in there, but also the deviation levels, the scanners, everything else. All these pieces will come together and be very helpful for you. You'll be able to log in and get access immediately to the live spread and the live and demo spread scanner and binary scanner as well, right here. So this will get you going, get you started, and it'll help you a lot in trying to figure out your trades. And you're gonna have questions, so I am encouraging you right now, use the Ask Darrell feature. Okay, you can ask questions right here. To submit them, you just go to Ask Darrell, you click New, and type in your subject, your message, hit send, come straight to me. And I'll be answering any questions that you have throughout the week on the air. I'll also reply in there directly for you. But it'll just give me a chance to really help you make the most of this competition and hopefully bring in some cash, $3,000 cash grand prize for 1 week of demo trading for the top place there. And we got $500 daily prizes coming out every single day. So hop in there this weekend. You need to hop in, grab this thing right now, go to the tutorial section, go to Getting Started, okay? It'll walk you through, things you need to know. Notice there's videos down here, right? So you can go across using the scanners, everything else, the deviation levels, and you can also go in here and look at the step-by-step basics. So, getting started, how it works, the markets, picking spreads, all sorts of information is on here. And we'll be glad to help you, like I said, any way we can. So and there's some other stuff here, plus archives of my shows where I've went over and done education or provided education, obviously on trading Nadex, because that's the one of the main things that I trade. I trade futures, I trade Forex, I trade options, and a little bit of stocks. But mainly I like to trade Nadex. So I do trade, probably more futures or futures Forex and Nadex, equalized there. But I love trading them all, and the thing I love about Nadex is the defined risk, the ability to do premium collection intraday on a daily basis, 21 expirations a day, so whether you're trading at night or during the day, you can trade on Nadex. You can start out with a small account. It means only $100 to fund an account for a live account, but of course, next week is all demo trading, right? So, of course, you can trade live as well. But the demo trading for the contest, and then obviously you're probably going to want more than $100 in there. But the amazing thing is you only have to have $100 in there to actually place a trade. Pardon me. And so let's take a look. Let's check out some of these things that have been coming out this week. We got the news that has come out, and let's look at this past evening. And some of them moved great, some of them not as great. So let's walk through them all. Okay. And what we're going to do is I'll pull up a chart over here. We'll get on in here. And now we'll go over and let's see, last night what we had? Well, we had the Japan monetary policy statement, and one of the few that actually has not been just the biggest mover in the world. But let's check it out. And they've had an insane amount of volatility lately, but they took it backstage, I guess, with all the other things coming on out. And so we go over here. And let me see the actual statement. Let me see the exact time of release today, because it's always a tentative one on the exact time it comes out. And let's see here. The press conference happened at 3:40. The statement came out at 10:42. So pretty much, 10:45 or so is when 10:30 to 11, around 10:45 is when we were talking about they usually come out. And so we can see really just not a market mover at all. So the statement had little to no impact at all on the market, which means they had no surprises built in there. And but the way that one went, you would have been better off, right, with a butterfly if you did trade that. Now, if we go on into the press conference happened around 3:30. Usually not the biggest mover. We actually had a little bit more movement this time on the press conference. Rarely do we get more movement on the press conference than we do on the statement. But as you can see, right about there, it was actually running up into the press conference. And then we got, about a 30 pip drop off of it. So really just not a big event. And like I said, that's rare. Most of these have been really, really big movers. But right now there's just no news. It's just the same old, same old. They're printing like crazy. Get used to it. We had the Spanish 10-year bond auctions that came in a little better than expected. Came in at 4.5. But last time they came in at 4.7, so they improved a little bit on their rates there. French 10-year bond auctions came in a little worse, 2.5 versus 2.3. Again, not major movers in and of themselves. Now, we have the asset purchase facility and the official bank rate. So basically the interest rate on the pound. Let's go ahead and, by the way, we'll do a quick market wrap while we're on dollar yen. We can see we haven't really even got a deviation out of it. So it was just really a rare day to not get any kind of movement. Dollar yen sort of went flat the last couple days. But we have usually been getting at least a half to a 1 deviation move on it. Just these last 2 days, it's been pretty quiet and stunted compared to everything else. All right, so that wraps that one up. Let's go ahead and check out the pound dollar. So on the pound dollar, we'll go ahead and check this out. Let's see where it's at right now. Right now we're down to about half a deviation on the day. Right there, we went down half deviation, pulling back up off of it at the moment. And the rate came in at expectations at 0.5%. So no surprise, usually no massive move. Asset purchase facility came in the exact same, 375. That announcement came out at 7 a.m. So let's zoom on in and let's see what kind of move we got. Like I said, it wasn't any kind of big surprise right there. So we'll go here. And we got our high, up here at, we'll say, 9 o'clock. Right there. Got about 53 pips on it. Obviously, it didn't move down at all. We got the quick high. So right here on up to this, about 48 pips. So again, not our normal move that we're looking for or expecting. Pretty quiet right now. And usually we're looking to get a lot larger move on the pound dollar. We usually get, though, at least a 34 pip spike. We easily got that spike. So the spike came in with expectations. And there was no major news that came out with it. So you should have been targeting to exit at break even after that thing sat there for quite a while. And you should have been able to get out at break even on that trade. Pound yen we can go over. We can look at it as well. Let's see here. We'll go and dig a little bit deeper right into the pound yen. And on pound yen, looking at this, again, the announcement came out at 7. We'll go over here. We usually get a little bit more volatility on it. And we'll see if we did today, if it held true. And 42 pips. So we actually got more volatility over on the pound dollar. And usually we get more on the pound yen. So yen has just really been stunted lately. Hasn't been moving for the last couple of days. Like I said, more of an oddity after all this massive movement we've been getting off of it. All right, so that wraps up the pound yen to pound dollar. And I'm going to teach you a trick, okay? I'm going to show you something. I get a lot of requests for this. So, and if you ever want this, just email me or whatever, or ask actually in the help desk, and I'll send it to you. But it's a pretty cool little trick. And people have been asking, how do I get the deviation levels on like pound yen and euro yen? Because I want to trade those on Nadex. And I can actually just tell you how to do it, but I made a spreadsheet. I mean, it takes 5 seconds. Okay? And what I did is I just went over to the deviation page, and I just highlight right here from the right, start at the right, go across, right click, and copy. And do the same thing for dollar yen, same thing for euro yen. And then check out here on this page. And we're gonna automate this. It's in progress. So here probably the next 60 days we'll get this automated. But so I copy and pasted euro, dollar, and dollar yen in. Okay? And then right there you got B2 times B3. So I copy and pasted them in. I labeled the rows just to make it easy. Okay? So this is like, let's see here, +1 dev. And this is, or just, 0.5 dev. It's not really +1, it's just 1. So 1 deviation. And then go on this. And this is sort of a Forex thing. It's how Forex works. Okay? So what you can do is you can actually take the -3 deviation on your dollar times the -3 deviation on dollar yen, and you get the -3 deviation on euro yen. That's called a triangle. And I'll talk a little bit more about this Forex triangle and how you can take advantage of that if you want to get deviation levels on euro yen and pound yen. Be right back after this break.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors.
TFNN is having an open house in the Tiger's Den for 2 weeks, and the best part is that everyone is invited and you just have to be a member at TFNN. The open house in the Tiger's Den has already begun and will last through our week-long virtual trading competition, which ends September 13th. Use this time to exchange trading ideas with other traders in the virtual chat room and to discuss trading strategy. For all the information and to take part in the Tiger's Den open house, log on to TFNN.com today. McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, welcome on back here to the Diagnostic Trading Hour. And so looking over here, what I did was, again, I copy and pasted the euro dollar and the dollar yen. And I just put a little formula, B2 times B3, okay? And I just copy and pasted that all the way over. Now for the 1 deviation and half deviation, you can't do that because this isn't force, this is actual pips. And so if you want to go in and do that, you just take the 1 minus settlement, that's 1 deviation. Take the 0.5 minus settlement, and that's half a deviation, or 1 divided by 2, it's half a deviation. But what this will do is it'll give you the deviation levels that you can then plot on the chart if you're wanting to trade the euro yen or the pound yen. So it's really helpful. Now the other ones, of course, we have already in there. They're automatically filling in on the deviations page. But if you're wanting euro yen and pound yen, that's how you get them. And why does this work? Well, let's look at something, okay? Let me pull up chart over here. Here, I'll grab... We'll do a think or swim here. And we'll bring up, 3 charts. And we'll throw up Euro USD. Okay, USD Yen. And Euro Yen. And I used to do this a lot during 2008. I did what's called triangular arbitrage. So, in math, one of the formulas you learn in algebra back in high school a long time ago, A over B times B over C should equal A over C. If it does not, then you get, a red X. Well, in the trading world, if A over B times B over C does not equal A over C, you get free money. It's called arbitrage, okay? Because the B's cancel out, so the A, C should equal. So what is A over B? Well, euro dollar, okay, so long euro, short dollar over dollar yen, long dollar, see short dollar if you're long euro dollar, and then long dollar if you're long dollar yen, cancels out, so short dollar by being long euro dollar, and then long dollar by being long dollar yen. That means long dollar and short dollar, or short dollar and long dollar means no dollar, means euro yen. So euro dollar times dollar yen equals euro yen. And you can literally go in and go, okay, 1.3120 times 100.3 equals, the actual price. I got to retype that in there. 1.3120 times 100.0. Keeps doing a plus. 1.3120 times, there we go, times 100.03, give or take, a pip is fluctuating around 131.23. And so you can see the euro dollar or euro yen right now is 131.27. Now the reality is you have bid-ask spread in there, and you got to make more than the bid-ask spread to actually have arbitrage. So if you have, like, say, a tick on euro dollar, a tick on US yen, 3 ticks on euro yen, whatever, you got to have more than that to actually have arbitrage. And let's see here. There's another way to do it too. Let me show you this inside of Thinkorswim that might even be a little more helpful. Go in here and go to trade. Go to Forex Trader. We'll do 3 of them that way. And we'll bring up Euro USD, USD Yen, and Euro Yen. There we go. Okay, so now we can do, like, instead of having the bid and the ask, because that sort of throws it off, if we're buying at 1.3122. If we're buying the other one, we're buying at 100.06. It's going to give 131.298, which is basically 131.30. So if you notice, euro dollar times dollar yen equals euro yen. If it doesn't, then you got free money. Okay? As long as it's greater than the bid-ask spread, and you can get all 3 fills. So, like on euro dollar, there's basically a tick and a half. You got another 2 ticks on dollar yen, so 3.5. And then you got, 2.5 over here, 3 on euro yen. So 3, 4, 5, about 6 ticks. You take those 6 ticks, you got to have the difference between the synthetic euro yen, which is buying euro dollar and buying US yen, and the selling the euro yen. The difference has to be greater than 6 ticks, and you got to get all 3 fills. Again, you get triangular arbitrage. All right, so I'll complete this lesson when we come back from this break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com. Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com. Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, here. So let's check this out. We got same thing. Now, if we go and do the pound dollar, okay, dollar yen, and we do pound yen, and look what happens. Okay, if we do pound dollar, that means we're long pound, short dollar. If we buy that one, and then we also buy dollar yen, that means we're short, or we're long dollar, short yen. So we're short the dollar on the pound dollar, we're long the dollar on the dollar yen. The dollar cancels out, which means we have pound yen. And so what we do to find out, well, what should the pound yen price be? Well, we go 1.5592 times 100.08. And we get 156.04, which is what we're seeing right here, 156.04. That's exactly what the pound yen says it cost. So that's why you're able to go in and take the deviation levels and just paste them in here and multiply them times each other, and you actually get the pound yen and the euro yen deviation levels. So something that can be really helpful for you if you are trading those pairs. And you can even do this for, say, Aussie yen. You can do it for, really anything that we have. So any cross of euro, pound, dollar, franc, CAD, Aussie, and yen. So any of those crosses. Now the formula is a little bit different. If you have any questions about that, let me know. But ultimately, what you're going to do is, if you want to equalize them, you got to cancel one of them out. Okay, so it's A times B equals C. A over B times B over C equals C. And so you may have to do divided by if you're maybe doing it the other way. But as far as euro yen and pound yen, that's how it works. It also works the same on Aussie dollar and dollar yen for you Aussie yen traders out there. Okay, so that gives you a fun deviation level lesson for the day. And a lot of times people go, what are the deviations? What are settlements? I get that question a lot. So let's go into what settlements are. And right here on the deviation level page, it has all this information about it. And when you scroll way down, not all the way down, but way down here, and you got what settlement is. Now, there's different settlements and different settlement rules based on the exchange you're trading on. But for, say, the CME, okay, what we do is we take the, CME takes all the trades in the last 30 seconds of trading, okay? So say it traded, between 1400 and 1404 in the last 30 seconds of trading. And they multiply times how many contracts traded during the last 30 seconds. And that's the weighted value of that price. So price times volume. They add that total weighted value up. So in this case, like 37 million. Okay? And then they divide it by the total volume. 26,500. The sum of that is the weighted value total volume. That's the actual settlement price rounded to the nearest tick. So 1400.25 would be the settlement price on this day, with these being the quotes that happened in the last 30 seconds. The reason they do it is sometimes you'll get some erroneous, you'll get a couple contracts, 1404. We see 1400, 0.25, 0.5, 0.75, 1, and then all of a sudden, like right at the last second, there's like 200 contracts at 1404. Well, that's not really representative of the volume. I mean, there's 26,000 contracts and only 200 of them were 1404. What if those 1404 were the last contracts traded? Then you get sort of like this discrepancy, and settlement can be easily manipulated. This makes it a lot harder to manipulate settlement value by making it over the last 30 seconds of trades. Now, Nadex also has settlement, and they even put that in their chart now. You can actually open up the settlement live charts, and what they're doing on the futures markets, okay, so the indices, the commodities, metals, all that stuff, they're taking the last 25 trades, and then they're getting rid of the top 5 and the bottom 5 for the erroneous type things, and they're averaging the middle 15, and they round it out to, like, I think 2 additional decimal places. And that determines the final settlement value. Now, on the spot, instead of being the last 25 trades, because there's so many different, it's actually based on quotes, and it's the best quotes there that they have coming in from Reuters. And what they do is they take the last 25 quotes, and they drop the mid price of those quotes. So that way, because you can get really crazy bid-ask on Forex. So they take the mid price, the last 25 mid-price quotes, drop the top 5 and bottom 5, average the middle 15. That's where settlement values come from on Nadex. But as far as the deviation levels, we base them off of the settlement price of that previous day. We post them around 8:30 in the evening to be good for the next 24 hours there. Okay? And then we have several deviations. So what do we got? Well, they're like pivot levels. They're like Fibonacci levels. But the big thing is pivot levels are based on yesterday's price, completely based on yesterday's prices. The only price we're using from yesterday is the close. That's it. When we do these deviations, we're pulling them from the implied volatility over 3 months options and multiple option contracts. We pull the implied volatility out, that average implied volatility, which is beta weighted in there based on volume and all the other stuff, and then tie that into a one-day deviation formula. A lot of people will think this is standard deviation, but standard deviation is based on historical volatility, how much the market has moved. This is based on implied volatility, how much the market says the market's going to move. And that's a very, very important thing to distinguish whenever you're looking at these deviation levels. This is not just, somebody's magical formula. This is how much the market as a whole says the market's going to move on any given day. Okay? And therefore, that's why they are so incredibly accurate day after day after day. They are very, very, very accurate, because it's like a survey where people have to pay to tell you what they think. Because it is a survey where people have to pay to tell you what they think. And what do I mean by that? Well, because implied volatility comes out of option pricing, which is based upon the demand for that option. And there's more demand on the, options when the market's falling, because there's usually more people that are long, and they're buying as far as, just the traditional investor, okay? They're buying puts to hedge. Where you have these long funds, even commodity funds, that don't even ever really sell their contracts. They roll them over, but they just use options to hedge off when the market's falling. So, it's that implied volatility can be extracted from the options. It's really complex. You don't need to learn it all. But the bottom line is all the math is done for you. And we take that implied volatility, we take that deviation one day, not standard deviation, but just deviation formula for one day, and tie it in. And then we get the deviation levels that, like I said, are just incredibly spot on day after day after day. And then you can use these deviation levels in a lot of ways. We go over the probability of each one of them being hit, how it works, one deviation being the most important level, because that is really the standard, that's, model for, how far a market's going to move on any given day. And then we also use the half deviation levels, but every level is important. And we use the stop method, the trailing stop method. We use it over on the 10-minute bars. And when that level's hit, that's when we know we're done. But you'll notice that these are just major pivots. You'll see the market hit them and just stop. See how we got 0.5 and the market just really oscillating right there at the 0.5 deviation level on oil right now. So hopefully, you pick up a couple lessons right there that will help you out whenever you're, learning how to trade, these deviation levels and use them. But I like using the 10-minute deviation method. That's probably my favorite method on them out of everything. A lot of people will use, I've seen people design entire systems around them, and that they've used very successful, that they love using. So, there's a lot of ways you can use them. You can tie them in as confluence with maybe fib levels, support resistance levels that you're using. Maybe you are using pivot levels. That can be a confluence indicator on top of that. So there's a lot of ways to use them, but I use them mainly as a stop-loss mechanism. So it's like, hey, if it gets this far, usually the market will start turning around, and that's usually when I want to be out, consider the market to be done for the day. And, we can go through and we can look at some of the different, instruments. And I'll do this, almost every day here on the show. And like we got the Aussie dollar right down here to 0.5. It actually was able to break to 0.7 and bounce between 0.5 and 0.7. But right down here to 0.7 is like where it's at, none down to. And we go down to euro dollar. Now euro, we had another announcement on, right? So we had the big news come out of Europe, and pretty decent move there. So let's take a look at that and what our expectations were and how the euro lined up with expectations. This is usually my favorite out of all the interest rate announcements. Usually is the euro dollar, just because we've got more consistency, and it's the last one, so it's not waiting on everything else. Like pound dollar, even when it comes out, it still has the euro one coming out shortly thereafter, so that can sort of stun it a little bit. Like if the move doesn't happen fast, then you got to bail. And so we did, and we bailed at break even. The trade was just fine. But a lot of times the euro dollar one can be the better out of the group because of that reason. So let's look on over here at it. We'll look at the ECB press conference, and it's scheduled to come out at 8:30. It's it's a two-part press conference. The first part is a statement. The next part is a Q&A. So you want to have at least an hour to let the trade play itself out, because there can be a lot of volatility during that time. And if we look over at the euro dollar, what we can see is we got a, 83% of the time it moves at least 78 pips. Euro yen, same thing, moves 76 pips, has about a 15 pip spike usually on it before it follows its direction, whatever direction that's going to be. And so again, the announcement came out at 8:30. So right there you can see where that happened. But here's where the announcement comes out. And then, we follow that down to basically, right around 10 o'clock. If you chose the 10 o'clock expiration, your lowest price was 88 pips. So perfect move. And we were looking for, 78. We got 88. Excellent. Euro dollar trade worked out superb. And like I said, that's usually among my favorites out of the interest rate announcements. We can go over, let's check out the euro yen. See what we got on it. And again, yen was a little bit stunted, so let's see what happens on this. Pull this one up. I didn't even look at the euro yen this morning for this. And if we go right over here, got a little move up first, about 25 pips up, but then we got the drop. So we got 80 pips, and from high to low, we got 107 pips. So we expected at least 76. So we obviously exceeded that on every measurement, no matter how you want to take it. So euro yen and euro dollar were definitely the champions of today's trading on the news. And you just go and you do a straddle or a strangle before the news, and they worked out very, very well. Like I said, my favorite of all the interest rate announcements is the euro dollar press conference. So of all things. Now let's go in and let's look at, we had one more potential. We had the ISM non-manufacturing PMI, and there's a lot of trades you can do this on. I usually don't do butterflies on it because of all the volatility before it. Okay? And usually you get about 55 pips. But one of the things I look at is, hey, if we get a lot of movement on the euro and the pound, which we got a lot on the euro, we got a decent amount on the pound. If you get decent movement on those, that can sort of kill this announcement out because all the movement sort of happened. So let's look and see what we got. If we got in here at 950, we had to move up 16 pips, and then we had a move right here down 30 pips. So total move basically of 46 pips on the trade, and not too bad. We got like I said, 46 pips on the trade right there. We're usually expecting on the euro dollar about 55 pips, and so for it to come within 10 pips of that really is not bad at all, considering all the movement, the 100 pip move that just happened on the euro yen right here. And so you could look at any one of those pairs. Let me pull up the euro dollar. We'll look at that one specifically. Let's see what kind of movement we got on it. So right over here, 10 o'clock. So we're looking at euro yen to 11. And let's see here. Euro there to here. And yeah, we got 57 pips on it. So we actually hit the 55 pip mark, which is what we were shooting for. We were shooting for 55 pips on the euro dollar. So that one actually worked out perfect. Right within expectations, straight down. So perfect move right there. So we got really both moves on euro dollar this morning. And let's go ahead, let's check out pound dollar. And basically it's because of the reading, the number came in better than expected, so it gave more dollar strength and helped continue on that move. The pound dollar, again, it was a little bit stunted, but we got 51 pips. We expected about 60, so that trade still would have worked out okay for you right there. And, nearly not a bad trade. I mean, right there where it expired at, really would have been the low of the day just about. And so it would have worked out okay. You would have made a little bit of money, not a fortune on that one, but it would have worked out okay. So not bad. So we got ISM that worked on that. We got the euro dollar, euro yen, all worked out. And then the pound dollar pound yen came in at break even. The dollar yen from last night's monetary policy, that one did not work out. So, but four trades working out, and one breaking even and one losing. Not too bad. All right. Stay right there. We'll be right back after this break.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.6% profit to an incredible 48% profit in just one equity. And all 6 of those winning trades had been initiated no earlier than just the previous month. With the 600th weekly Gold Report issue fast approaching, Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began, and right now you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber, as this volatile gold market provides trading opportunities after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial to the Gold Report today by visiting TFNN.com.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, we're going back here to the Diagnostic Trading Hour. And checking things out right now, looking on over at the pound dollar. We're just going through the news announcements. What do we got coming up tomorrow that you need to be aware of? Well, we're going to have the, the dollar franc CPI, not a high-impact event, but 20 to 30 pips, around 3:15 that is coming out. 4:30, we got the pound manufacturing production report coming out, and several other mid-levels. So a 20 to 50 pip move. With that many announcements, you can get a little extra volatility out of it. And then we got ADP non-farm payroll. Again, the ADP non-farm payroll. So, what are we expecting on this one? Because it's a big one, okay? The euro dollar, 100% of the time over the last 2 years, has moved at least 50 pips. The average range is 100 pips, okay? The pound dollar, 88% of the time, as well as the dollar franc, 88% of the time has exceeded 50 pips within 2 hours. The Aussie dollar, 83%. The dollar yen, 67%. So probably out of all the trades, the one I'd avoid, the dollar yen. Okay, that one's a no, because 67%. So you can look across euro dollar, dollar franc, pound dollar, Aussie dollar. Dollar franc, 110 pips. Actually the biggest mover on average off of the ADP NFP report. So that surprises some people. You'd expect it to be something else, but it's actually the dollar franc. Okay? So dollar franc right there, 88% probability. And average spike, initial spike, 55 pips with an average move of 110 pips. So big mover right there on dollar franc. And why do I give you numbers on euro dollar, dollar franc, pound dollar, Aussie dollar? Well, because you're going to go in, and sometimes the implied volatility on one pair may be really high, but not as high on another. And so you might find a better opportunity. Maybe on Aussie dollar, it only moves 60 pips, on average. But 83% of the time, it breaks 50. So it pretty much, you're expecting it to hit at least a 50 to 60 pip mark. If you can find a good low-risk trade around $40 or so, then you got a good trade on Aussie dollar. Pound dollar, again, that's 88% with an average spike of 50 pips and a 104 pip move. Euro dollar, 100% of the time, moving 50 pips. And the initial spike's 50 pips with an average move of 100 pips. Again, dollar franc, 88% of the time, 55 pip spike. 80% of the time it moves, 88% of the time again it moves 50 pips with 110 pip range high to low after the announcement. So if you can find some trades that are not overly inflated, then you can get some really good trades on there. And don't forget, you could even, if you want to do binaries, if you could find some good ones, there's ones that expire like at 11 o'clock and stuff that are trading 24 hours a day, or 23 hours a day, I guess. They trade from like 11 to, 11 a.m. to 10 p.m.? Or what is it? No, 10 p. It's 12 p.m. to 11 a.m. So it's like a 1 hour gap in there. So you could hop in on them anytime you wanted to. But just be aware, those are the big ones in the binaries there. Then you got the spreads going on as well. And the report comes out at 8:30, so you can hop in at 8 and take advantage of the trade. But that's the big one. Now, the other one we have another very high impact report at the same time. Okay, dollar CAD has its employment change, unemployment rate coming out. It's a very big move. 8% of the time, it breaks 50 pips. The initial spike is 45 with an average range of 80 pips. So really, all in all, you have euro dollar, dollar franc, pound dollar, Aussie dollar, and dollar CAD all being great trades to straddle tomorrow morning. This is like the big news of the week. Okay, beyond the euro announcement, which was the biggest one so far out of all of them, the euro press conference is going to be the ADP NFP report. So hopefully that gives you some trading ideas, some things that you can take advantage of this week. I will see you tomorrow morning on the Bull Bear Binary Hour. Stay tuned. We got another great show coming up for you right after this.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.